Tim Wegman of BIS Commodity, and just taking a look at this past week in review, and let's just start where we closed for the week. Start out in the grain markets. Taking a look at corn, we did see the July contract close 2.5 cents higher in the week at 365.5, and new crop corn, decent corn, closed 4.5 cents higher, just under 383. Soybeans took a hit this week, down 23 cents in the July contract, just a hair over 953. And new crop beans, November beans, closed at 934.5, down 17.5 cents on the week. The big winner this week was wheat, up 29 cents, most of that coming yesterday, if not all of that coming yesterday, and that closed at 511 in the July contract. The meat complex, a little bit of a volatile week in the cattle futures, but when it was all said and done, we actually only closed 2.5 cents higher on the week in the June contract at 152.52.5. July hogs were weaker in the week, down $1.50 in the in the June contract at 83.32.5. Looks like the dollar is going to close lower this week. Trending lower as well. Looks like the close will be somewhere above $93, 93 points in the index. And then the energies look for a fairly steady close, an inside trading week for oil, RBOB, and heating oil this week. So the big news item this week was a monthly S&D for the grains. And not only did we get our old crop S&D, but we also got an estimate for new crop, and not a whole lot of surprises there in the corn side. The trade came in at a 1.851 billion bushel carryout in corn. This is a 24 million bushel increase over last month's. Not a huge surprise there. Came in pretty much in line with what the trade was expecting. We did see an increase in export demand, but that was more than offset by a decrease in the food and residual number. So kind of an odd head scratcher there to see the decrease there. But we did see still a swelling corn carryout number. Taking a look at the new crop, the question was, were we going to see trend line yields? We're going to see a push higher or push lower. We didn't see much of a change at all as far as yield, and it came in about as anticipated as far as trying to estimate that far out as far as yield, demand, and acres. We penciled in a 1.746 billion bushel carryout for corn, and it's pretty much right in line with what the average trade guess is. Last year's new crop estimate was 1.8 billion, so a little bit less than last year at this time. The entire growing season ahead of us, of course. Soybeans, we did see a cut in the carryout for the old crop beans, down to 350 from last month's 370 million bushel carryout. Pretty much in line with what the trade guessed, a little bit less than what the trade guessed. And we did increase demand, 10 million in exports and 10 million in crush. So not a big surprise there. Probably the surprise of the report was probably new crop soybean carryout. Knowing we were going to probably plant a record amount of acres, yet to be determined, but that's what we're looking at right now, and throwing in the trend line yield and leaving the demand side of the balance sheet fairly unchanged. USDA penciled in a 500 million bushel carryout. That's probably more than what the average trade guess was, probably about 60 million more bushels than the average trade guess, and that put some pressure on the markets as well. Wheat carryout continued to increase as well as we continued to reduce demand out there via exports. We did see the carryout come in at 793 million bushels. We were looking for 750 million bushel carryout. So a little bit negative on the wheat side as well, even though wheat was the winner this week, up 29 cents. And most of that, if not all of that, again, came yesterday on a big short covering rally. There is some talk of El Nino out there that raised some concerns about Australian production as well as Southeast Asia. Also some concerns about the wet weather as you're approaching harvest down in the southwest, how that may weigh on grain quality may be weighing out, as well as some cold temps forecasted to come into the Dakotas next week, Monday and Tuesday, testing that freezing level. And I think that spurred a little bit of a short covering rally. The funds were holding a very large short position. And once we took out that 50-day moving average, we only found momentum up there. So we closed it up 32-33 cents yesterday, only to take about a dime or excuse me, a nickel or so away from that today. And speaking of the funds, the commitment to traders report for the week, and this is through Tuesday. It's not including Wednesday's, yesterday's, and today's trade. But what we're seeing is still a record or a heavy amount shorts in corn, beans, and wheat. We did see corn for the most part unchanged as far as the managed funds. This is the money that will buy or sell the market. And they're holding still roughly a short 114,000 contracts. Probably didn't add a lot to them the last couple days. I would suspect it's fairly accurate. Soybeans, we did see with that big push down earlier in the week on Tuesday's release of its report. We're sitting at 50,000 short. So we actually seen the shorts double up almost double up this week. We added 21,000 shorts to that contract. And wheat was through Tuesday was short 104,000 contracts. Again, this is from the managed money. So they were taking a little bit of money off the table. I would suspect that short is smaller, much smaller after yesterday's hard rally. I would suspect that we're going to see that short diminish next week as well, unless we see a huge rebound early in the week next week. So the managed money has probably going to be looking here after these reports. Going to take a look at Mother Nature, and as I mentioned, Australia and Japan officially declared an El Nino to come in place again. You're looking for dry weather in Southeast Asia, India, Australia as well could hamper wheat production, but also in the same time that does mean we could see a little bit more precip in the southern plains as well. And on official El Nino years, going back and taking a look at trendline yield, we have recorded above trendline yield 70% of the time. So as you take a look at the markets right now, we're off to a very quick, fast planting pace on corn. Beans may have slowed some this week. We'll take a look to see what Monday's planting progress report has to say. But right now we're going to take a look at Mother Nature, and right now cooler temps and moisture in the forecast. It feels like it isn't going to excite any of these managed funds out of their existing short positions from the weather forecast alone as we sit here today. Taking a look at the meat market, cattle futures for the week, again unchanged. We did see we did print a high in the choice cutout, 264.75. I am now 100% sure, but that may be a record high in the choice cutout. And that did spur a good hard rally Thursday or yesterday this week. And we were able to push June futures up to 155, or just shy 155 in the June contract. The last time we were that high would have been the first or within the first couple weeks of January, only to see a sell-off today. You take a look at that futures market, still trading below cash. Cash, as of yet of this broadcast, has not traded, but I would suspect on some of the bids coming in out there right now that we're probably going to hold at least steady on the week, still up there in that 160 to 162 range. So we're still going to be trading futures at a discount to the cash market, which makes it a very tough market to keep track of here in that June futures contract. Historically, we do see the cash market sell off the month of June, and since the 2000s have been in print, the decade. Every year we've seen the cash sell off in June compared to the May contract all but 4 years. So I would suspect the trade is still expecting cash to weaken. Most likely Memorial Day buying has been done. We might see a little bit more buying next week, but I would suspect that print high this week, you've seen the retailers, or the wholesalers and or retailers probably done buying for the Memorial Day 3-day weekend, not only for beef but for pork as well. And as the hog futures continue to grind higher, that grind this week was a little bit slower. Cash slowed down a little bit as well. The cutouts holding in here. Cash just grinding more, not the constant up. Taking a look at the futures contract, June contract's looking a little toppy right in here. Certainly hedging opportunities. I think if you can still pop a 75, 76 area in that June contract in the short term. And I certainly would be taking a look at anything over that $70 in the D's area as an opportunity, as well as we're expecting a larger numbers to come in play in the fourth quarter hog production. So look to get something out there just to get yourself protected. So if you have any questions about these or any of the markets, please feel free to give us a call here at BIS Commodities. You can get a hold of us on the phone at 1-800-373-2525, or you can check us out on the web at biscommodities.com.